A mother called FLAVORx after she got her child to take her medicine, and that phone call sparked an idea. That idea became part of the Jobs Act, and that idea is now a $3 billion industry. And it really allowed me to launch D3VC, which is the first AI powered venture fund using our proprietary data and this entire ecosystem. And this is the complete story. So, in way back when, I used to work for a company that I co-founded by the name of FLAVORx. We flavored medicines for children, so they're more compliant. We grew from one pharmacy to 40,000. We were venture funded. It was just a wonderful story all around. We flavored medicines for children, so they're more compliant. And I used to get calls from mothers all the time after they got their kids to take medicine saying, it was a struggle. Like we could not get my child to take her medicine or his medicine. And they took it once it was flavored. Like, how do I invest in your business? And I always told people listen, you can't invest in our company unless you're an accredited investor. And that is essentially a rich American. And I always thought, gosh, this is a missed opportunity. I even said to our lawyers, can we get these people to invest in our business? And they said, no, these securities laws that were written in 1933 are there to protect investors. So we raised money from venture capital. And I always thought, boy, if these mothers were investors in our business, they would be brand advocates. They would have a vested interest in the outcome of the company. They would bring in consumers that increase our sales, spread awareness, it'd be marketing. What a missed opportunity. So we sold FLAVORx in 2007. And then in 2008, we had the Great Recession. I was living in Washington, D.C., and it was very obvious at the time that Washington, D.C. was looking for jobs. And so I said to two friends of mine that I went to graduate school with and that were Silicon Valley funded entrepreneurs too, what if we change the securities laws? What if we finally said, let's merge the principles of donation and rewards crowdfunding, what we were seeing on Kiva, where people were lending money to entrepreneurs in a foreign country, and what we were seeing on Kickstarter and Indiegogo, where people were giving money to people with great ideas, but not getting anything really in return other than maybe pre-ordering a product and feeling good about it, but merge those principles with early stage venture capital. So we sat down with a blank slate and essentially said, well, what are the exemptions under which we raise capital? And it was Reg D, if you're familiar with the exemptions. And we said, let's build a similar exempt framework for essentially investment-based crowdfunding. And that's what we did. It was an 8 bullet point framework. That's all it was. We ran it by our friends in Silicon Valley. And we said, what do you think of this? At what point would we be stepping on your toes? And, ideally we wanted to go out with a $5 million round. And they were like, no, reduce down to $1 million. And so, we went to Washington, D.C. with this framework for the ability to use investment platforms to raise money for retail and accredited investors, so your average Joe, to invest in startups all across the country. We went to the SEC with the idea, and they said they thought it was cute and that we should take it over to the building with the white dome. We went over to that building and immediately started walking in the halls of both sides of the aisle. We asked to speak to the people who were in charge of jobs. People were confused as to who we were. We weren't lobbyists and we weren't lawyers, but we had an idea, and it was about how we could stimulate economic development all around the country, how we could create jobs, and it resonated. So Patrick McHenry was a Republican from North Carolina. He was our main champion. And he called a hearing. We testified at that hearing. The White House had someone at that hearing. The White House called right after that and said, we're interested in what you're doing. Please give us a 2-page write-up. We gave them that, and we went back to lobbying in the House. And the White House came out with a statement of administrative support for our bill that had passed 407-17 in the House. And we went over to the Senate, and we did the lobbying on the Senate side as well. We testified in front of 5 U.S. House and Senate panel hearings altogether on this. And it passed the Senate 73-26, and we got to go to the White House and sit in the 4th row as President Obama signed our bill into law. It was an absolutely amazing day. And it fundamentally changed the way in which startups raise capital now, because for the first time in history, you can go onto one of these online investment platforms, crowdfunding platforms, we call them, and raise up to $5 million from your friends, your family, your followers, your social network. And it's really stimulating opportunities all across the United States. There's been 2,300 cities that have benefited from this. There's been 8,300 companies, more than that, that have used this and run 10,000 what we call rounds of financing. So it's really been a transformative part of the capital markets. And this whole ecosystem is really taking off now. What we've seen in it is, in 2022, we had the collapse of Silicon Valley Bank, we had hyperinflation, we had supply chain issues. VCs, stopped investing. They're still sitting on trillions of dollars of capital, but they stopped doing what they were really doing, which is supporting startups and hyper growth companies. And they moved upstream and left this void in the marketplace. Investment crowdfunding has really come in to fill that void, because a lot of these startups are raising money in what we call tranches, so small rounds of financing. And it allows them to go to their investors, their friends, their family, and say, I need to raise money for these specific milestones. And then if you invest in it, you can be an owner in this business, and hopefully we continue to scale and grow, particularly with your help. And we can actually have an exit maybe. And when we have that exit, that money gets paid back to you, hopefully at a multiple of what you invested in. And everyone does well. We as entrepreneurs do well, you as investors do well, our economy does well. It's a win-win-win. And we've built this ecosystem out through data. When the industry went live in 2016, we launched the very first aggregator for the industry. We call it CClear. And it collects up to 150 data points on every company that's raising money online. And what makes our data set unique is, it sounds like, if you're familiar with the private capital markets and private companies raising money in Silicon Valley, PitchBook or Crunchbase or CB Insights, they all cover data in the venture area. But what makes our data set unique is we take forms that are filed with the SEC, and so there's data fields that everyone has access to. And then we go and we pull in more information about the company. What industry are in, what valuation do they have disclosed? Are there any women or minorities that are running the company? I mean, it's fascinating to understand how the women and minority have been positively impacted by this legislation. We pull that information in along with the financials, and then we track these companies over time. And what does that mean? That means company A can do a round, first an initial round, and then 10 months later do a follow-on round, raise more money, and maybe raise it at a higher valuation, and have updated financials. Maybe a fiscal year has passed, and so we've got new information on their revenues, their costs, their income, and we capture all that in the data set. And maybe they file annual reports, which you're supposed to do in the legislation, and we track that information. So imagine all these data points coming into the data set. That's what makes it really powerful. But what we collect too, that doesn't exist in the private capital markets, barely exists in the public markets, is what we call investor sentiment, through the number of checks that are written on a daily basis into an offering and the total amount of those checks. And what I mean by that is that same company A that's raising money, they have a start date for the raise and an end date for the raise. And they're out there marketing their offering to their friends and family, and people are coming in and they're signing papers and cutting checks. So we can see the number of checks that are going in on a daily basis into an offering and the dollar amount. And so hopefully it's trending up like this over time. And you imagine when you've got 8,300 plus companies and you're seeing what's happening here, you can see within a company what's happening, but within an industry what's happening, with women and minorities what's happening, in different cities across the United States what's happening. And we aggregate all this information and we publish it through CClear. And we've got reports that we publish. a weekly tear sheet that we give away for free, a bi-weekly report that just sort of changes week to week and what's happening in the industry. We have a monthly report that really covers what's happened from this month to that quarter, to that year, to the entire year, so you can see the trends that are happening. We also cover a sector in the monthly report. So we cover a deep dive into healthcare and investment crowdfunding and how that has been performing. And by the way, it's been one of the biggest performers over the past 12 months. Software and technology used to be the biggest performer, and that's another report we do. We do a food and beverage report. So we've got 12 distinct reports that we do throughout the year. And then we've got our annual report. And our annual report was 200 pages long with this last one. It takes us a month to put the whole thing together. When the industry launched in 2016, it was just 8 pages long. So the amount of information that comes out of this is mind-boggling. We aggregate this information through our CClear product, and we use it and we repurpose it. We actually have come up with a tool called the Offering Insight Report. And so if people are interested in putting one of these offerings together and raising money from their friends, the first question that people have for us is, well, how much can I expect to raise? Which platform is right for me? What valuation should I go out with based on my revenue, based on how old I am, based on where I'm located? So we took all the data and all we did was merge it all together and created this report that allows you to feed in who you are, what you do, a bit about your financials, and then we will deliver to you a 10-page report that tells you those answers to the questions that I was telling you about. It's a game changer for startups. It saves you time, it saves you money, and it helps you understand what you can really accomplish through this investment crowdfunding framework. I also took all of our knowledge. I mean, once the bill was signed into law, we helped launch the industry, but we were hired by the World Bank to write the World Bank report, Crowdfunding's Potential for the Developing World. And we went around the world thanks to the State Department. We traveled to 43 countries, helping build crowdfunding ecosystems from Mexico to Chile to Saudi Arabia and Malaysia. I mean, we have been all over the world working on this. And so we also wrote the Dummies Guide when this came out. Now, the Dummies Guide didn't really go anywhere when it first came out because it came out in 2012, but the industry didn't go live until 2016. And so nobody really bought the Dummies book. And I was just like, people need to know how to do investment crowdfunding. So I took all of the information from the past 14 years and I shrunk it down into 400 pages. But I wrote a book called INVESTOMERS. And it's essentially my brain on this entire industry. And it allows you to understand where this industry came from, why it's so important, how it creates innovation, jobs, economic stimulus, pumps billions of dollars into local economies, and it's working on a global scale. I've got chapters in there on the data. I've got a chapter in there on best practices. This is a series, so there's another book, which is the playbook. So if you just want 150 pages on how to succeed, we've got that as well. But what I've come to realize with all this data and everything that's happening is there's the ability for us to now transform investing in private startups and early stage financing in general. And what I mean by that is, remember I was telling you that venture has moved upstream. They want bigger, less riskier deals, and they write bigger checks for it. But that creates a void, an opportunity in this early stage marketplace. And so I said to a couple friends of mine, I was like, if we can take all the data that I have and look at the companies that have done follow-on rounds of financing, and you're not going to get a follow-on round unless you've been successful at hitting your milestones. And so we look for those signals of what did they do right to get to that follow-on round of financing. And we build a formula, an AI, so we all heard about AI, but a machine learning algorithm. So we feed in data and it learns from all the data that we're feeding in it. You also wean off old data. But maybe there's a way to build an algorithm that can pinpoint the companies that are most likely to go on for a follow-on round of financing. So what we're trying to do is look at those companies, see is there a marketplace for that product or service in there? Does it have the potential and the team to scale it? Does it have the IP to protect what they're doing? And do we want to invest in it? And so we built D3VC, which is the venture fund on the back end of that algorithm. And we have weekly predictions that are delivered to us. And we do diligence on these companies and we invest in them. And that is really where we think the future of this industry is going, because now we can build bigger funds that allow people to really take smaller amounts of money and diversify into these funds and let our algorithm do the work to help us look for these companies and make investments in 200 companies, hopefully, that will allow us to have outsized returns. That's our goal. So there's a ton going on in this industry. I am super happy that you took the time to listen to what we are up to. I think it's going to be a fascinating next decade. So thank you, and we look forward to building more with you. And one final thing. If you want to see if your company is right for investment crowdfunding or even D3VC consideration at that, you should take our free assessment. I'm going to provide a link right here so you know where to go. It takes less than 2 minutes, and we will tell you if you are crowdfunding ready and if crowdfunding is right for your business.